Markets are trading every new headline like diplomacy is real and risk is fading. But when you track the leaks, the timing, and the positioning around Trump, Pakistan, and Iran, the whole setup starts to look a lot more manipulated. Financial markets have rarely looked as manipulated as they do now. Insider trading is a crime. Market manipulation is a crime. Yet the argument here is that both are now deeply embedded in the system. Trump insiders appear to know what is coming in his posts before the public sees them, and they can position trades or bets in advance. So far, there has been little sign of serious investigation. The same dynamic applies to political storytelling. A claim circulated that Trump had saved 8 Iranian girls from execution. In the version presented here, that story was fake, but it still serves multiple purposes at once. It can lift markets, make Trump look humane, and suggest that U.S. pressure on Iran is working. Media outlets such as Axios and CNN then repeat these narratives with too little scrutiny, while algorithmic markets react instantly. Pakistan became the latest example. Islamabad said Iranian Foreign Minister Araghchi was coming and sounded optimistic that Americans might come as well. Markets immediately started pricing in peace, as if some permanent breakthrough were just around the corner. Later, it looked more like a routine stop on a broader trip that included Moscow and Oman, with no confirmed U.S. role at all. Then the Trump side added that Steve Witkoff and Jared Kushner were expected in the coming days. No clear timing, no clear structure, but the market moved anyway. That pattern repeated with a report from Al Arabiya, based on an anonymous Pakistani source, saying talks between Iran and the U.S. could resume that very day and that a breakthrough might even be possible. The logistics alone made that hard to take seriously. Araghchi would need roughly 3 hours to reach Islamabad from Tehran. The Americans would need about 16 hours from Washington. Yet the market still reacted as if a peace deal were imminent. Iranian-linked sources then pushed back. They said no bilateral talks with the Americans were planned. Iranian media did not confirm the story. Tasnim suggested only that Araghchi might deliver Iran's response. Even that is not necessarily bullish, because Iran's red lines are still there. Uranium enrichment, control around the Strait of Hormuz, and missile issues remain non-negotiable from Tehran's perspective. That is why the supposed optimism looks so thin. Axios reporter Barak Ravid cited 2 U.S. officials saying Witkoff and Kushner were expected in Pakistan in the coming days, but that wording can mean almost anything. A source from Tehran said no one from Iran would speak with the U.S. side. If Vance is not involved, and if Witkoff and Kushner have no formal authority to decide anything, then the whole episode starts to look like political theater rather than diplomacy. Even CNN framed participation as if it were settled, despite the lack of confirmed Iranian consent. There are also signs of turbulence inside Tehran itself. Reports surfaced that Ghalibaf had stepped back from a negotiating role, only for that story to be walked back. An Iranian lawmaker portrayed him as a heroic figure who had survived repeated attacks and even spent hours trapped under rubble. At the same time, a claim circulating from Mossad-linked reporting is that Khamenei Jr. may be dead because no trace of him has been found. None of that suggests stability. It suggests confusion and internal struggle. Iran is also rewarding selected countries. Pakistani ships can reportedly pass through the Strait of Hormuz without tolls. Russia can do the same. Spain has also been mentioned after Sanchez refused to let the Americans use Spanish bases for attacks on Iran. These are not random gestures. They fit a broader pattern of pressure, favors, and selective alignment. Meanwhile, regulators insist they do not tolerate manipulation. A CFTC official said that in crystal clear terms, and recent arrests show authorities can act when they want to. A U.S. soldier was reportedly arrested after betting on Polymarket on the fall of Maduro, while allegedly knowing in advance what was being attempted. In France, another man was reportedly arrested after manipulating a weather bet by using a hairdryer near the measurement point at an airport in Paris. But when it comes to large bets in oil and equities around politically sensitive events, the standard suddenly looks very different. That is why the larger accusation is so serious. The claim is that there is industrial scale insider positioning around foreign policy, oil, and risk assets, while officials publicly pretend the system is clean. Personal financial interests and affairs of state are blending together. The line between politics, media signaling, and market positioning is disappearing. The military backdrop is also becoming more dangerous. General Dan Kane reportedly said Iran continues to mine the Strait of Hormuz. Trump warned that anyone doing so would be pursued relentlessly. Pete Hegseth said Iranian speedboats were still threatening ships, despite earlier claims that Iran had already been effectively neutralized. Hegseth has also reportedly removed 34 senior military leaders, which is interpreted here as a purge of doubters in favor of yes men. The most important shift may be Trump's own stated priority. He has now made clear that preventing Iran from getting a nuclear weapon matters more to him than oil prices and more than stock prices. That is a major change. Markets had assumed he would always protect the S&P 500 and gasoline prices first. He himself said he thought the start of the Iran war might trigger a 20 to 25% sell-off in stocks and push oil to $200. But he was prepared to accept that if the result was stopping an Iranian bomb. That matters because U.S. force levels in the Middle East have reportedly doubled since the start of the war. The signals increasingly point toward some attempt to reopen the Strait of Hormuz by force, possibly even involving ground or amphibious operations. If Wall Street is this euphoric, Trump may think he has a cushion for escalation. There are plenty of supporting signs. Ben Gurion Airport in Tel Aviv is reportedly crowded with KC-46 and KC-135 aircraft, the kind of tankers needed for major operations. U.S. Central Command has indicated that 3 aircraft carriers are now in the Middle East at the same time. The Chinese embassy told its citizens to leave immediately. The last time Beijing issued such a warning was on February 27th, before fighting broke out on February 28th. If the conflict widens, Iran could again strike Gulf energy infrastructure. The State Department's wording on Operation Epic Fury is also revealing. Washington says it entered the conflict at Israel's request and in collective self-defense with its Israeli ally. That is not a minor phrasing issue. It is a direct acknowledgement of how the U.S. sees its role in the war. The economic consequences are already significant. This is not just about crude oil. It is also about helium, naphtha, and everything else moving through the Strait of Hormuz. The figures cited here suggest that 14.5 million barrels are effectively missing and that Gulf oil production is down 57%. If that is even roughly right, higher inflation expectations are the logical result. That brings the Fed back into focus. Markets care about inflation because inflation drives rate expectations. Powell says the law is clear. If no successor is nominated and confirmed, he remains in office until one is. Trump says he would simply fire him and install someone else. That means mid-May could become highly contentious. At the same time, some investors are already talking about ECB rate hikes in June because of war-driven inflation, which is still a bold assumption given how uncertain the whole situation remains. And yet equities continue to act as if none of this matters. Semiconductor stocks were described as more overbought relative to their 200-day average than at any time since June 2000, with Intel adding more fuel to the AI mania. The Nasdaq keeps climbing. Hard economic data, including the IFO survey in Germany, are weakening. Sentiment in manufacturing, services, and trade has deteriorated. But markets still behave as if all-time highs are perfectly justified. That is the core point. Markets are no longer trading mainly on sober fundamentals. They are being yanked around by leaks, anonymous sources, media amplification, political theater, and possible insider positioning. Add a real war risk on top of that, and the result is a financial system that looks less like a fair market and more like a machine, being pushed and pulled by people with information and incentives the public does not have.
Thanks for watching. If you enjoyed this video, please leave a like, subscribe to the channel, and share your thoughts in the comments. Stay informed, stay rational. See you in the next one.